Hello, everyone. Thank you so much for joining us for another weekly wrap-up. My name is Jeremy Kronemeyer, Operations Manager for Wickham Financial Group, and Graham Wickham here, President and CEO of Wickham Financial and Insurance Services. Graham, what happened in the markets last week?
Yeah, thank you, Jeremy. Thanks for our listeners jumping on another call. So we look at the equity markets. The S&P index, that was off about 0.4 last week. We saw the Nasdaq Composite off about 0.6, and the Russell 2000, that small cap index, off about 1.5%. But we did see some pretty modest gains overseas with the emerging markets. If we look at some market drivers, what kind of fed into that, we saw some cooler inflation data and some U.S. China trade progress. From a geopolitical shock standpoint, Israel's strike on Iran caused a lot of market volatility, a lot of question. We look at oil, that ended up shooting up to about 77.62, settling back to about $73.56 per barrel. Now, that was an increase for the week of about 13.5%. Gold futures, they jumped up, safe haven trade, if you might, that jumped up about 3.6% to $3,450 per ounce. Inflation and rates, we saw the U.S. CPI numbers come out. Now, they increased about 0.1% in May, but the year-over-year inflation was 2.4. Keep in mind, roughly 2.5 years ago, we were looking at inflation of about 9%. So we really see a huge moderation here. The PPI, Producer Price Index, that was up about 2.6% year-over-year. If we look at Treasury yields, they fell after some strong demand for the 10 and 30-year auction. If we look at the one-year inflation expectations, that did drop to about 5.1% from about a 6.6% expectation. Now, sentiment and confidence. Consumer sentiment rose sharply. That was the biggest jump that we've seen since January 2024. And the small business confidence improved amid some easing trade tensions. Now, globally, if we look at the World Bank, they cut global growth forecast by 0.4. So they're expecting about global growth to be about 2.3%, warned of some slowing growth pace since the slowest growth pace since the 1960s outside of some recessions. Now in China, their CPI fell for the fourth straight month. Producer price deflation worsened. Their exports to the United States, now get this, that fell 34.5% year over year. Imports declined due to some weak domestic demand. Now in the UK, we saw the April GDP contracted sharply. We saw job vacancies fall, hiring slowed, and their wage growth slowed to about 5.2%. Now that's still above inflation of about 3.5%. Now, in the Eurozone, we saw the investor sentiment improving. That was bolstered by some optimism in Germany and some easing U.S. trade policy concerns. Now, this week, we'll be having a holiday on Thursday, Juneteenth. The markets will be closed. The Federal Reserve, they're going to be meeting Wednesday. Now, they're expected to hold steady with everything going on with the geopolitical events and trade, and the potential increase that some of this, at least the trade, could have on prices. I think they want to stand pat right now. That's our expectation. I think that's what we're going to see. Now, they'll be updating their summary of economic projections, looking at some trade budget risks and Middle East conflicts and what role that may continue to play with their policy stance. We're looking at some economic data release. We'll see the May retail sales, housing data, retail manufacturing survey, industrial production. They'll all be rolling out this week. Labor market, that had some signs of slowing, some rising jobless claims, the highest continuing claims since late 2021. Now, overseas, the Bank of Japan's really not expected to do anything with rates, looking to keep it pretty unchanged. The Bank of England. Now, we got some weak data increasing the chance of some rate cuts, and no change expected for the week. The next move is likely to be in September. And if we continue with the economic data and look at China, they're releasing their monthly industrial production numbers as well as their retail sales. Jeremy?
Gotcha. Graham, I had a question for you. You mentioned some of the Middle East conflicts right now. Do you see that continuing, going through the end of the summer? How do you see that playing out for the markets?
Yeah, I think it's got to add volatility to the markets. I think that's without saying. I mean, it's unsettling. What's the depth, the degree, the involvement the United States is going to have in this? So I think we just got to wait and see. I think you couple that with trade talks that are still going on, the tensions that are out there over that, as well as the valuation of the stock market. That's not egregious, but it's certainly well above average, trading about 22, 23 times forward earnings. Now, that's not a huge concern as long as earnings hold up and as long as the market's willing to look past some of these negatives that are out there. And I think the market will, and I think it's demonstrating its comfort level to do so. But that could change. So expect more volatility. We're expecting the market still to hold up here, even though we're expecting a little bit slower growth, some more drama going on with trade and geopolitical events.
Gotcha. Well, Graham, we always appreciate the information and expertise, and thank you to our listeners that check in with us every single week. We look forward to seeing you next time.
Take care.